Guys, Dylan Weston here, back again with another video. Market's moving very nicely. On eToro, we're currently up 9.49% for the year. It's only 7th of February, and I don't think this is updated yet. So there's like a nice 5% move overnight. So once this does update, we're probably like 14% plus. So let's not get too excited about that. We're talking long term here. In the grand scheme of things, this is still small percentages, right? Still very small percentages. For the year, it's great, because the goal is to be compounding at 20+%, 30%. So far, luckily, we have been averaging 30% annualized for the last 5 years since I've joined eToro. Let's see if I can keep that up or not, but, I'll be perfectly fine with anything above 20%. That's what I truly believe I am capable of, but only time will tell. What we want to talk about today is when we're talking about making millions, all right, when we're talking about making millions of dollars, usually I think the thing to think about is the millions is in the simplicity, all right? So when we're talking about investing, like the more simple, the better. If we're talking about the business world, let's say it's just like franchises as an example, they're very simple business models. Usually simplicity is highly correlated with making millions, in my opinion. Like, if an investor comes to me and they just blah 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 blah, make it seem highly complex, and you're just like, bro, what are you actually even talking about? Major red flag, right? It should be broken down to simple terms so it makes complete sense. So in terms of technical analysis, which I like to focus on a lot, it really helps guide my investing decisions in the stock market. It's about simple lines. I see these guys, they're drawing all these lines all over their charts, right? It doesn't make any sense. Like, are you trying to be an investor? Or are you trying to be Picasso? What actually are you trying to do? Because if you draw a million lines, mate, the stock market moves in a squiggly formation. It's gonna bounce on something. You could get a checkers board and just paste it on your screen. It's gonna bounce off some things, right? So you're just fooled by randomness when it comes to that. Usually, I like to stick to like 3 lines roughly, right? 3 lines on a chart is like kind of all you need. Anytime you go more than that, it's kind of overkill. So 3 lines roughly, 3 major lines. I like to have that as a constraint, and then you actually know what is going on. All right. So simplicity is, that's how you make your millions. Keep it really simple. Just a quick thing, I was talking about, hey, once this updates, we're probably up 15%. Let's not get super excited about that. Let's understand what that means. It's still small in the grand scheme of things. What is the actual goal? The goal is to sacrifice, work hard, make a lot of money, invest it wisely, and hold for the long term. 15% ain't going to change anyone's life, right? We need to be talking, how do we get 1,000%? Now, we don't need to be talking how to get 1,000% in like less than a month. How do we get 1,000% in 10 years or 11 years or 12 years? If we compound at 20 or 30%, let's just say we continue to go at 30%, it happens around the 10 to 11 year mark that you actually make like 1,000%, all right? 10x your money. So I like to talk in X's, right? 10x, 20x, 30x. It's really weird how compounding works. Like, I have to just remind myself sometimes, like, compounding is insane. Like, if you think something goes up by 30% every year, like, how my brain works, and I believe the average brain works, is like, we do addition in a weird way. 30, 60, 90, like, with times 10, it's 300. It seems like, the market would roughly go up 300%. No, it's 1,000, right? It's 10x. So as an example, go to a compound interest calculator. And what I like to do is just type in a dollar, right? And monthly contribution, just put 0, and then put in the time of years 10. Put the interest rate, let's just say this case it's 25. So, we're doing 30 at the moment. Let's be a little bit conservative and say, let's, 25. In 10 years, that $1 will turn to $9.3. So every dollar you earn today, you save today, could be potentially $9 in the future, 9 times, right? And as just a quick lesson, a lot of people back when I was grinding my ass off at Nando's, making $21 as a store manager. This is 10 years back, right? A lot of people, they're always saying, "Oh, like, you're only making $21. You could make 23 if you were just just worked at Colsey, or you worked at Woolly. You could make 23." I'm like, mate, it's an extra $2. Like, what knowledge am I getting for that first? I think I'm sacrificing knowledge here, because when I'm working at Nando's as the store manager, I get to treat this business as my own. So I'm getting paid to learn about business here. But on top of that, I was very fortunate that because I was the store manager, I could put myself on the roster as much as possible. And so what did I do? 70 hours every single week. So I was earning more than $1.4 thousand back 10 years ago. So it's about your total dollars, man. Your total dollars. I don't mind if the hourly rate is a little bit lower. I want to be getting those total dollars, right? And combine that with knowledge, because there's an opportunity cost and there's a value to your knowledge that you're accumulating now in the moment. Like, a lot of the Nando's knowledge, I use it now with the stock market. I use it as the founder of Headstart Capital. That's another thing, right? It has paid me back, well and truly. I haven't lost. I didn't lose anything. I didn't lose $2 for all of those hours that I worked at Nando's. I actually made a lot more than that. And let's just say I was getting $21 an hour. And I was like, in my spare time, I'm building how do I compound my wealth, right? Every 10 years, that money's going up like roughly 10x potentially, right? Well, for the past 5 years, it has. That's all proven on eToro. So another 5 years, all of those dollars that I've earned will be going up 10x. So was I earning $21? No, I wasn't. I was earning 210, right? You don't earn that at Woolly. You don't earn that at Colsey. Get where I'm coming from? All right. We're getting all over the place. That was a little bit of a rant, but let's get back to work. Let's make the money, sacrifice, invest. Look, it's really tough out there right now, cost of living, all of that's tough, but get creative, right? Don't allow the mental diet. It's flashing on the news, rants and saying, yeah, it is. It's true. Let's get creative with it, figure it out, and increase our savings rate and invest. All right. That's that. Let's go. Today, what I want to do is I want to talk about Nike. So in the last video, we're talking about Palantir. It's been pumping hard. It's like up even more overnight, big green candles. And I go back and check out that video. I show you my lines. Very, very simple. Looked, I just drew out the all-time high. And one of the key things was, I say, a high quality stock, if I like it, like this example here, this is Nike. I like Nike, right? Right now, Nike is out of favor. A lot of people are talking a lot of shit about Nike, but hey, for me, Nike isn't shit. Nike is the good shit, all right? I don't know when a stock is going to go down. A good stock is going to go down for a prolonged period of time. I cannot predict that. But in the moment, when it's already happened, I can start to say, all right, this stock has gone down for quite a long time. How long do stocks like to go down for? 1 to 2 years, maybe 3 years. 3 years is pushing it, right? Stocks usually like to go up more. Great stocks like to go up more than they like to go down. So if you go down for 2 years, your probably odds are going to go up for 4, right? Roughly. You're going to go up at least double the amount of time. In most cases, then you went down, okay? So simplicity is what will create the millions. So I've started off with just one line on Nike, one big fat green line, which is I'm just connecting the dots. And every time the market has crashed, it has gone roughly to this green line. Okay. And what we can see is if we zoom out, the line is going up. So this is going back to like 1993. Bro, this is like when I was born, man. It has been going up since 1993. So every time it's gone down to this line, it probably was scary in the moment. Like right now, it's probably scary. If you're an investor in Nike, you haven't had much fun because right now the price is like $70. And it reached its high in around October 2021. So it's been, like it's almost 4 years now. It's almost 4 years. So it's really getting to that, it's getting up to 4 years, which really is actually a very rare occurrence. Um, so going down for 4 years, it makes me more bullish. It makes me more excited that it's probably going to go up for 8 years after this. All right. That's how I think. I always think contrarian. I don't think, hey, it's gone down for 4 years. It's got to continue for another 4 years. No, things like to reverse back to the major trends. The major trend for Nike is up. Now, that doesn't mean I'm going to be correct. That's why I like to keep my investment sizes down to like 1 or 2% because I can be wrong, right? At the end of the day, I'm not a genius. I can't understand everything and I don't have a crystal ball that can predict the future, right? And these lines, there's nothing really super special about them. They're just lines on a chart. So they work, but they're not guaranteed. So that's why I like to always use like the 4 pixel option. It's a bit thicker. Honestly, if there was like a 10 pixel version on TradingView, I would probably even use that. So with these major lines, like what I actually like to do sometimes is I like to use this parallel channel, right? So I put this parallel channel in like this. Let's just line it up. And then I like to just drag it out a little bit like that. And then let's just make it green. Green means support. Green is good. Green means go. That means it's going to bounce most likely. So I just made this parallel channel just to imagine, hey, this is a little bit thicker. This is thick, right? There's nothing special about my 4 pixel line. I wish it was actually 10 pixels, right? So I'm just going to color that in nicely like we're in kindergarten. Again, keeping it really, really simple. So I'm saying the long-term trend is like this. So what you can see is like, hey, if this long-term trend continues, in 10 years, where should the price be? We can come down here and look at 2035-ish. So it kind of vanishes around here. It's probably around the $300 mark. So it could go from 70 to 300-ish within the next 10 years. But what I also like to check is getting that parallel channel back again. You just quite simply go like this. Connect the highs. The market likes to go from really cheap to really expensive, and it fluctuates between those levels. So if we draw this back here, there we go. Whoops. All right. So you can see what we're talking about. Back in 1997, it was quite bubbly and it went all the way to the top of this, just like it got expensive in November 2021. So what I'm going to do is just delete that and I'm going to turn this red actually. Right. So red means that's the roof. That means stop. You're probably going to be going down when you get that. You're probably getting a little bit expensive when you get up here. So right now we've got 2 lines on the chart. Now, I want to draw another line. Quite simply, I want to draw a downtrending line, which is just connecting these dots like this, right? Very, 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 very simple. Let's move this out of the way, get the big skull out of the way, and connect this nicely, and just connect the tops. We're connecting the tops of the mountains, right? So that's the medium term or the shortish medium term downtrend. I believe once Nike finds support somewhere around this green line, I don't know exactly where it's going to be, and then starts breaking above, 1 week above, and it closes, and a second week above closes, it's probably a good sign that you're going to start making your move higher. And the downtrend for the short and medium term is completely done. So if that happens, if we get above this red line for 2 weeks in a row, and those candles look strong, big green candles, I believe the market will want to move quite a bit higher. So very simple, right? Overall, I think Nike's a great brand. I think it's really, really cheap. Everyone's talking mad shit about it. Actually, it's the good shit, right? Yeah, it's been terrible for almost 4 years. That's rare. That's very rare. Usually 1 to 2 years is all the stock goes down for. Getting close to 4 years, that's more rare. That makes me more excited, right? That's having me thinking. And then see, I got no emotions involved, all right? I got no emotions involved. And then when I do place the investment, I'm not putting my whole net worth on this stuff, so I can't sleep at night, just 1 or 2%. So even if I am wrong, it's not going to bother me at all. But I think this is going to be a great investment. Great investment. And, in 10 years, you could be looking at a price of 300. If you get lucky and you get a bubble, it could bubble up to even like 1,000. I know it sounds crazy. But depending on the timing, it could, let's say it bubbles up in 10 years, you get to 1,000. You bubble up earlier, you get to 400. Depends on where it is in terms of the red line. All right. So, lesson for today is keep it really, really, really simple. Right now, as a copier of mine, if you're copying on eToro and all of that, um, you know, and like you're not, odds are most people copy me because they believe that, the truth is that uh, I'm great at this job. This is my thing. This is the thing that I've dedicated my life to. I am a black belt when it comes to this stuff, right? And it's different to a physical, like martial art. Like if you're actually talking physical martial arts, imagine there's the teacher. I don't know if you, do you call him guru or whatever? I don't know what you call it. Probably not guru. I don't know what he is, the master or whatever. You can catch up to him, even if he's a black belt and you're a white belt, you can probably catch up to him one day if he trains you because he's going to teach you all the knowledge. But it's not about the knowledge. It's also about that his body's going to deteriorate. Luckily, in the game of investing, your body doesn't really matter that much. It's your brain, right? It's your brain. And, if our peak fitness, starts to peak at around 35 to maybe 40, I know, depending on the sport, I believe most would probably argue closer to that 35 level. That's not with investing. Like, I believe you probably hit your peak if you're fortunate enough to have good health, 70s, 80s, and it's probably like 80 plus that you start to kind of deteriorate in terms of your ability to think. But by that stage, your wisdom could be so high that it actually makes up for your lack in raw horsepower in terms of your mind, right? So in terms of this game, it's gonna be goddamn hard to get above me. That's the truth. Like it's gonna be, unless you got raw horsepower and proper dedication, it's going to be really hard to outpace me. So, that's just the honest truth with this stuff. So to wrap this back to where I was going, like I probably was a little bit long of a explanation. If you're a follower, you kind of probably understand that. All right. Now, in your shoes, if you don't have all the knowledge in the world, it can get confusing in this world. In this world, we're bombarded with information 24/7. And what are these news articles trying to do? What is social media trying to do? They're trying to grab our attention, and how they do that. It's all about psychology and human emotion. The more emotional it is, the easier it is to grab our attention. That's why, they talk about highs and lows, the fear in the market, the greed in the market. It's always the extremes, right? Um, and what people often like to do when it comes to the stock market is they like to make it seem so much harder than it actually is, right? And then they'll use all these big words and, it will sound so confusing. And then every now and then they'll wrap in some, really negative information in there, right? Remember, if it's not really simple, it's a red flag, man. It's a red flag. Luckily, if you're like my age, 30 plus, and you've been in this game for like 10 years, you kind of gotten used to it now. There's a doomsday scenario article every week talking about something. It never comes true. It never ever comes true, right? Um, so that's the lesson for today. When people are talking and it's just not making sense, that means it's probably a red flag and you probably should just ignore it. Be careful of it because I've seen it many times before. People allow that to seep in. Remember, your mental diet is just as important as your physical diet. It can seep into their minds and make bad decisions. Sometimes there is a negative with the stock market. Yeah, I love the stock market. I believe it's the best. I love the liquidity. I love how fast you can make money. But there's a negative to it. The negative is it's actually really, really easy to sell and take your money out. So you gotta be careful. Like that's actually a con, I believe, of the stock market. So don't allow anyone to play on your emotions and convince you otherwise. Make sure you do your own research and it makes sense to you. If you're a little bit confused and you're make a big financial decision, make sure you get advice and maybe you would like to sit on it for a few weeks or even potentially a few months, right? There is very rarely often a financial decision where you have to act like this in the moment. Nothing's going to crash overnight. And if it does crash, like COVID crashed, it's probably going to sling back really fast, right? Everything in the stock market usually reverts back to the mean if it is fundamentally sound. If it is a fundamentally a strong asset, whatever happens, it usually reverses in the same way. If it comes down quick, it goes back up quick, right? Nike gone down slow for 3 to 4 years, probably going to go up slowish 3 to 4 years, even more, even more. The stocks like to go up longer than they like to go down, right? Get all this wisdom together, you make really great financial moves. But remember, all this, not financial advice, do your own research. If you've got any questions, you know what to do. Hopefully this made a lot of sense. I'll see you in the next video. Let's go.